Welcome to the Motor Carriers Insurance Education Foundation monthly webinar that we title The Truck Stop. These truck stops presented the second Thursday of each month at 2 p.m. Eastern Standard Time. These webinars are open to members of the MCIEF. These webinars presented as an industry updates for informational purposes only and do not qualify for state CE credit. If you're seeking state CE credit, please visit our website because we offer a number of programs for members of the foundation at a reasonable cost. If you have any questions, please type them in the chat window. They will be answered as time allows or responded to after by email. If you experience any audio problems, please send us a note in the chat window again or call 800-741-4084. We'll attempt to correct the problems as soon as possible. We're hearing a lot happen in Washington. Some of it's getting beyond just the trucking part of it. There's a lot going on in the trucking areas as far as legislation and all that. And when we have anything that's involved in Washington, I try to reach out to Dave Hellier, who is with the Truckload Carriers Association, who we've had a long-term relationship with. Some of you have been to our annual conference. You know Dave has kicked the conference off a couple of times. So with that said, Dave, I welcome you, as you said, from your basement in Washington. Is that to get away from everybody, or what there?
I think my wife just kicks me down here and locks the door and lets me get through all of this stuff.
Well,
thanks.
Welcome. I'm glad that you can find the time to walk through this stuff, because we're hearing a lot in the press and all, but maybe we can spend an hour or so and kind of sort some things out. Exactly what does it mean to the motor carriers and to their insurance providers?
Fantastic, and happy to do so. And as I said before, or when Tommy and I were talking, if we can make this through without my dogs barking, we'll consider that a win, and which is always a good thing. When Tommy kind of gave me a call and said, how do we want to go about doing this? I got a couple of questions we want to talk about on this webinar. And the first question is going to be, do you feel the increased minimum liability limit has any chance of becoming law? And it's a great question, and quite honestly, this is that question that certainly seems to be, has certainly blown my phone up. I can't tell you how many times I've gotten this question or how many conversations I've been involved in this issue. Without a doubt, this is one of the more popular things, and it's probably one of the big things that everybody listening to this webinar is interested in. So happy to share some news on this front. There's a lot of moving parts and pieces when it comes to minimum liability limits or minimum liability insurance as bestowed on the trucking industry. And the first thing to note is the appearance of the update to that minimum of $2 million was not really so much of a surprise, but rather the surprise was the proposal made it into the final bill that cleared the House. And that's really what it comes down to. And we're going to get into a little bit of logistics on that shortly. And it was kind of, the surprise was what sticks, what doesn't stick. And if you know these types of bill-making environments, you know, they always say laws and sausages are two things you never want to see how they're made. And this kind of equates to that one big issue, is how are these things made, and in going that route, that's what it boils down to, is this is something that certainly came in and said, okay, it appeared in normal times you wouldn't think it would stick just because there would be so much opposition to it, but it certainly did stick, and they made it out of the House with this $2 million minimum liability insurance, increased from the $750,000. So let's look at where we are, or where we've been with this minimum insurance. Yes, sir.
This is a part of that the House bill that the Senate has not taken up concerning the overall infrastructure bill, right?
It is. It certainly is, and we'll get to that in a couple slides.
And that's the dilemma. We're in favor of everything there except this, or maybe not everything, but that's the dilemma here.
Yeah, and that's one of those things. This is one of those poison pill things that sticks when we as an industry look at something like this, and quite frankly, you know, you start talking about the limits and what is that right number. And I think you can put 10 people in a room and ask them that same question, and I don't think any of them are going to have the same answer. So it's fair to point out that $750,000, where that current minimum is right now, was introduced in 1980, and that hasn't changed since 1980. But what has changed is obviously prices, inflation, all that fun stuff that go into some of these things, and if you take that $750,000 and you adjust it to CPI or Consumer Price Index, today it equals about $2.33 million. If you adjust it to medical cost inflation, and that's that 750 starting number, we're now at $4.99 million. And it's fair to note that back in 2013, there was a bill introduced by Representative Cartwright out of Pennsylvania, and he called for $4.422 million. It's fair to point out when you look at some of these things, a lot of these are driven by plaintiffs' attorneys or friends of plaintiffs' attorneys, and that's where some of these numbers come into effect. It just goes that whole route and says, okay, here we are, this is what we're looking at. And these are where those numbers are, but it remains to be seen is where did they get 2 million from? And some people will say, okay, 2 million is basically that number of CPI. So
David, let me go back to Cartwright here again.
Please go ahead.
By the way, our friend Rob Mosley's had some cases against him. And I understand, just for a humorous part of the audience here, I understand the Senate or the House was even caulking an ethics problem because he's a plaintiff's attorney, and not only a plaintiff's attorney, his wife is still a plaintiff's attorney, and there's some law, some provisions of government that you cannot pass a law that benefits you personally. So wasn't there a lot of, remember all that discussion involved in all that part of it?
You're right, and I was doing the DC two-step and not necessarily going down that road, but you hit the nail right on the head. It is Cartwright, he is that plaintiff's attorney, and there is some questions as to
just to rectify this. Let people know who's doing this and why it's being done. That was,
yep, without a doubt.
That whole series is kind of humorous when it went through all that stuff. By the way, I put this in here. Actually, the 750 did not go into place until 1985. It was 500,000 before that.
Okay.
for the first, it went from 300 to 500 in 1980, and then 750 in 1985. They gave a 5-year movement up top to get the insurance carriers in place to make those filings. In fact, if this, as a note, Dave, you've heard of the 91X filing. The X came here versus the 91 because there was an ability at that place with reinsurance and all in place for insurance carriers to meet the new 500 750. So the X allows it to be layered for the first time, and that's where the X came from back in those days. That just shows I'm old and seasoned and all that, but just a brief history of where all this came from.
Trust me, when this first came out and started talking, I was all of 8 years old, so it just tells you, and I'm old, so it just kind of looks that way. But
I appreciate that, Dave. So go ahead. I didn't mean to interrupt you, but I thought we'd add a little humor to this discussion.
No, I think it's worthwhile, too, and it's always good to note that Rob Mosley had gone up with him in a couple of court cases, if you will. So and this becomes, looking at some of these things, and Tommy, as you talked about, is the question then becomes with the number being 2 million is will it stick? And if you paid attention, if you're a policy geek or policy wonker, no matter how you look at it, when they went through these amendments, and there were somewhere about 300 amendments that took them 2 full days to vet when they got them introduced and got them voted up, which seemed to be a lifetime when you're sitting here watching the action that went on the House floor as they talked about voting up and voting down. All those votes went strictly on party lines. So, one of those nicknames that came out of this infrastructure bill that was voted up in the House was called the My Way or the Highway bill, because quite frankly, it was a wish list for Democrats. And it was one of those things that anything the Democrats put in, that got in. Anything they wanted out, it got out. And this was one of those things that got put in and stayed in. And when you're looking at this $2 million number and you're looking at the results in the previous slide, adjusted to CPI, adjusted to medical cost inflation, what does that $2 million and where does it come from? And obviously, the proponents will say it's just rounding down, but that's leaving 300 grand on the table. So it's seemingly, this is arbitrary at best. And things like arbitrary in nature don't necessarily stick around too often. And this $2 million number is what many people are viewing as arbitrary at best. So the question is will it stick? And this is one of those things. And we continue down this line is once it clears the House, then the Senate obviously has to issue their version of the bill. Now, there's language out there that came out about a year ago from Senate EPW, which is one of the committees that has to ring in on the Senate side for the Senate version of infrastructure. And that's the only group that has actually weighed in. Senate Commerce, which is much like House T&I, Senate Commerce has not issued their safety titles where this minimum liability insurance number would come from. And they haven't taken it up, and I don't think they're going to, neither as Senate Finance or Senate Banking, and where all the money comes from to support some of these bills. So none of them have weighed in really on what their version looks like. And Leader McConnell has basically said there's no desire to do infrastructure right now, even though they were getting pressed by the White House at a certain time to say, hey, let's get infrastructure done. But quite frankly, Leader McConnell said, no, they're not doing it. Now's not the time to do it. A lot of people are equating infrastructure to stimulus, but the reality is it's just not the case. I can make an old person joke here, Tommy, for you, and say, back in the days of FDR, when they came out with the New Deal, that kind of had that same rebuilding America flavor. But when you look at the timeline of something like that, that's long term. It really is. It's not the short term fixes that they're talking about right now downtown today on stimulus packages. And this can't be construed as a stimulus package because, quite frankly, it's not. It's an infrastructure package. And the effects of this would be long term, not short term. So it's just not the time to do it. Yes, Tom.
And the good and bad about this is it long term, because it takes a long term for the highways to improve and giving some means to go ahead and invest in this kind of stuff. But the big question on top of this that I was listening to and dealing with is how you going to pay for it.
Yep.
And the current fuel tax. In fact, my grandson was actually in the debate tournament, and he was debating in favor of fuel tax and hadn't even looked at anything. I fed him a lot of information in that part of it for him winning his debates because he hadn't looked on the trucking side. He looked at what was on the public side here. I mean, and yet the fuel tax needs to be replenished, and yet if you read all the articles even today, it looks like they're going to be trucks on the highway, they're going to be electric. So I mean, that's the big hurdle without this limit question to even talk about all this.
Correct. And that's kind of the bigger fight to have is exactly, you can put anything in a bill you want, and until you figure out how to pay for it, it's not going to do anything at all. And yeah, you're right, that fuel tax that carriers pay on their diesel fuel, the fuel tax that everybody listening to this pays at the pump, that goes directly to what's called the Highway Trust Fund, which funds all of these mechanisms. And it's the majority funding mechanism to raise money to support rebuilding our roads and bridges, which again hasn't been raised, and we'll put a date on this, that hasn't been adjusted since 1993. So the bigger issue is how can we do this? 18.4% of the fuel that you put into your car today goes directly to the Highway Trust Fund, and that represents the major funding for that, with roughly about a 1 to 2% administration fee associated with that. So what are some of the other avenues in which some of this is paid for? You can talk tolling, but there are pros and cons to tolling. There are pros and cons to fuel tax too, as you said yourself. At someday, sometime soon, these cars and trucks are going to be electric, and they won't be going to the pump. So there has to be new additional ways or different forms of revenue that have to be examined to support the Highway Trust Fund. And that becomes the conversation going on today, because not only do you have to focus on paying for your roads and bridges today, you have to focus on paying for them tomorrow as well. And quite frankly, COVID didn't do anything to help this issue. In fact, it almost exacerbated the issue, because people stopped going to the pump because nobody was traveling, nobody was driving to work, everybody was working from home. I think in 4 months, I probably went to the gas station once or twice to fill up my car. So you're not paying as much into the fuel tax as you would normally do that in the normal course of business. And of course, roads and bridges didn't miraculously fix themselves. So it shortchanged that trust fund even more so.
For you all who are listening to this, just to tie in, if you don't we put all the tie a bow on this or bring it all out. If those that you have that's required as a part of underwriting, and some people even based a premium on the miles on here, this is what we're talking about. The difference that Dave's talking about is what the federal take of the tax. The IFTA is the state fees that are also added to the tax, and each state has a variance part of it. So for you who aren't familiar with this kind of area, we're all talking about that IFTA situation. One is the federal, which is automatic. The second is the state, and that's what we report. And if you remember, have to look at the IFTAs, you report the miles they travel in each state, and how much fuel they consume in each state, and that becomes the leveling part. And this is what we're talking about here, is those taxes tied to mileage and fuel purchases in states. This is what's funding the federal, and then the state also gets their money from the fuel.
Yep, you hit the nail right on the head, Tommy. That's absolutely perfect. And again, this goes back to kind of that timeline, and here becomes the real gray area, right? Is if the Senate does take infrastructure up. And again, now we're mid-August at the time of laying this out. And you've got September, October, November, 3.5 months until the election. You have to say they would have to do it now in probably a very fast-moving fashion, which isn't going to happen because nothing quick happens at the federal government. If this goes down the path of the Senate, and the Senate is controlled by the GOP or the Republicans, you can expect that same course or roadmap of what happened in the House to happen in the Senate, just by virtue of that's what happens in Congress nowadays. So you would think anything that the Republicans would want in the bill would get in, and anything they would want out would come out, which, you know, talking about this $2 million minimum insurance liability, that would be one of the things that would come out. So in saying that, if they did put a bill up, you know, the real fight comes down to when they go to conference, because when the House votes up a bill and the Senate votes up a bill, it then goes to what's called conference, where they marry the two bills together, and a lot of things end up getting shook out on the floor. And at that point, if it did go to conference, I imagine if it's prior to the presidential election, that the Democrats would have very little appetite to move forward with that bill. And there's a simple explanation to that, because if they move forward with a bill that ends up on President Trump's desk, you know, quite frankly, people would be afraid he might sign it. Not because it wouldn't be a good bill, but because he could claim victory over that, and it could end up as part of the election or part of the campaign. And the last thing one side wants to do is to give the other side some ammunition, if you will, when it comes to some of these election issues. So it becomes a whole political hotbed inside the Beltway type stuff, which is real interesting. But right now, Joe Biden's got, a 15-point lead on over President Trump when it goes into the election. So they wouldn't want to jeopardize that lead by giving President Trump something to openly acknowledge that this has really become the biggest issue.
And I also don't think it would be something that the Democrats would go to all the way to the end and not give on this limit if everything else would agree to. It's not something I think they would stand up and fight for. It's not one of the essentials in the life either.
It definitely would be something that probably ends up on the cutting floor first. And so, right. But when you're looking at the scope of infrastructure bills and timeline and past performance, almost always equals future performance. The last time they went down this road and went from MAP 21 to the FAST Act, which we're currently operating under right now, there were 13 CRs issued before settling on this FAST Act. Now, the FAST Act does run out at the end of September, so the wide expectation at this point now is that another CR is going to be issued to continue the FAST Act until after the presidential election. And that just kind of is par for the course, or seemingly follows the same roadmap that happened last time we went down there. So again, the issue is, go ahead, Tom.
So we hear a lot, these two acts, Dave, we talk a lot about in the insurance industry, not relating to what we're talking about today. Moving ahead with progress in 21st century. For you who might remember, this is what we refer to all the time about why brokerage needs to be separated. While the truck broker, the bond went from 10,000 to 75,000, and the separation, and we've had a lot of discussions about this part of it. This is a part of this act, which at that point required a study about these limits. And what we deal with the FAST Act, Dave, is that's where the scores were taken down.
Yep.
So we do that. So just to let the full circle, these acts were many, many pages long, and we in the insurance industry had a little element of some of them. Again, MAP 21 is the brokerage concern that we still talk about. In fact, I talked about this last week with an insurance company about how to, when they have it the same name. And second part is a FAST Act that went through the study of the CSA scores and now the item response theory and all that kind of stuff that never happened. So that's what we hear every day. But that's also a part of the funding and the studies of doing this, and also funding the interstate or the highway system and that stuff. So I just thought, since they hear this all the time, this is just a part of those bills or those acts.
And on that same line, when you talk about removing the scores from public view for CSA, you know, this bill that just got voted up in the House side, there is language in there to make those scores public again. So it kind of shows how one side, for every action, there's an equal and opposite reaction, and this actually is quite the case in saying that. So it's interesting that you bring it up, and it's a fair point that there is an amendment in there to make those scores public again. So it's one of those things. Is it going to stick? Will it stay? What happens when we go about this the next time around? So,
well, Dave, I think you know they've always been public. I mean, we use them every day. Planes
Oh yeah,
continue every day. We have access. I mean, that's the thing that nothing happened. It's just now we have to pay for it versus getting it store
well
on it.
yeah,
So that's the only difference. It's still a part of it getting, the truckers get a load based on their CSA scores. And that's
correct.
because the vending companies that the shippers and brokers hire, Carrier 401, and those people give these scores and give a warning, and then we use CB, Social Analysis Bureau, Carrier software for underwriting purposes or some proprietary. So it really hasn't ever been hidden.
Yep, without a doubt. And you hit the nail right on the head. And the interest of this industry, though, is industry related, is those that are getting the scores like yourself. You're generally not referred to as the public because you actually know what you're looking at. You're not confusing it with a foreign language of some sort. You can dot the I's, cross the T's, and say, okay, I know what this means. Whereas the general public, looking at CSA scores, wouldn't have a clue about what they're talking about. So it's one of those things, and that's that removal portion of it, or reactivation of the partner. Tommy Ruke knows what he's looking at when he's looking at a CSA score. Most other people do not. In doing that. Now, when you're looking at this $2 million liability issue or increasing it, the real victory on this issue, if there is a victory, is the fact that getting it in the bill continued the conversation. And one of these things is in DC, if you can continue that conversation or continue to go down that road of that conversation, that's considered a victory because it means they're going to continue to talk about it. You're keeping it on the front of the lips of the people that govern and regulate. And this is one of those issues they're keeping it in the front of the line as opposed to it disappearing from behind. So that's kind of the victory there. Is it going to stick? I don't think it's going to stick, but it is fair to point out, and Tommy, you talked about it before with the nuclear verdicts, is, if there is an increase in minimum, we almost have to keep and start talking about tort reform to accompany that and keep those nuclear verdicts that seem to be going all about in check. And it's a heavy uphill battle, to say the least, but they kind of go hand in hand, if you will, when you start talking about some of these things. Because
you mentioned tort reform very briefly, and I know I don't want to make a time because I appreciate your time. You got a quick just view what Louisiana did and what your thoughts of what came out of that tort reform. I know that one bill got vetoed, then they passed the bill the governor signed, and I haven't had a chance to look at the details of that Louisiana bill.
Yeah, I did look at some of the details on it, and not knowing as much as I probably should on it, it is fair to point out that it represents, and this becomes one of those issues when you talk about tort reform, if you will, it represents a 1 in 50 battle that needs to go on across this country. And when I say 1 in 50, because there's 50 states in the country. So when you start looking at some of those things, you have to start looking, each state has their own tort laws and this tort reform isn't won or lost at a federal level, it's done so at a state level. And that's what Louisiana does. So when you look at some of these nuclear verdicts, the end game almost automatically has to be done to keep the rewards or the court rewards out of the plaintiff's attorney's pockets. And it makes no sense to continue doing that. And that's what you have to start looking at. And you have to go by the state by state level. And as we talked about before, plaintiff's attorneys certainly have a playbook in mind when they go down this road, but the fixes are at the state level, and Louisiana is representative of that fix.
And it was truckers helped do that. That was the point I was trying to make. So
correct.
It can be done. That was a good process. Okay.
Yep. Moving on, next slide. Also, obviously, rate increases these days are paramount, and this is one of those things we do have to acknowledge that is now the right time for a rate increase upon motor carriers. And we did a straw poll at TCA, and the average rate increase that carriers saw was about 15% year over year, last year into this year. And any rate reduction in today's world is almost equates to a unicorn or a Bigfoot sighting, if you will, meaning it's fictitious, and you should be considered lucky if you happen to get a reduction, or a carrier that got a reduction, or mainly just state status quo, because it just doesn't happen these days. So rate reductions are rarity, if non-existent, and increases at TCA member companies equated to about 15% increase in premiums out there. So it's an interesting world we're going to, and it doesn't make much sense because if you raise the minimum liability, premiums are almost always going to go up. So that's one of the things. Now certainly is not the time to do that. Tommy, go ahead.
I shared everybody an article from maybe A and Best that came out a couple of weeks ago, that the insurance industry has lost money since 2010, and the last ratio was 109%. So for every dollar come in, it costs $9. I mean, for 99 cents there. For every $100, it costs $9. Just to take the money in, Dave. And this would just be a killer. Part of it. I read an article actually. This came in on the 5th about the average increase every month in commercial auto is about 5%, and that's the problem. If we talk to your members, they share this. It's the whole insurance is everybody shares the results of everybody else. But I would even talk about your increases, and when you tell me that 15%, it's more significant with your members than the first dollar policies that most of the agents who we're talking to writes, because a lot of your insureds are self-insured at a high level, 100,000 to 500,000. So when you want 15% at that excess level, that's even worse than the first dollar. So
it gets into some real money at that point.
Yeah, it gets some real money. Yeah. So that's I mean, I knew you knew that part of it. So this is a real thing, and you know, these nuclear verdicts, and just to Dave, the nuclear verdicts are where you got the companies with money. Most of the risks that we write don't have that, but because of the fear of what happens in this area, our adjusters and our underwriters and our lawyers are having to put money into the kitty just in case. They don't want it go in front of a jury. And there's a factor that I'm sure you're aware of it, bad faith, that if the insurance company does not offer policy limits, then they will be responsible for anything above policy limits if the other side will accept the policy limits. So it's raised everything. And I've always said that nuclear verdicts is the tip of the iceberg. It's all that underlying stuff that raises all this up.
Correct, because where it goes from here is, and you said it might be one of those large carrier issues right now that experience that. Eventually, it starts to trickle into those different size carriers, and a small carrier that operates the right way doesn't want to be faced with something like that if the tea leaves continue reading the way they do. So it's one of these things that certainly trickles down and plays a role in just about every carrier's operations. And nuclear verdicts, I don't think you can open a trade publication these days without seeing some story on a nuclear verdict, or seeing a session or an educational session used to address nuclear verdicts or teach on nuclear verdicts. So quite frankly, the issue has made its way out there, and certainly has permeated into the industry, so that everybody is fully aware of what's going on in this. And the last thing I want to do is be faced with one of those nuclear verdicts.
Yeah, I was on War Dog Radio Show twice last week talking about it, and Rebecca Burst with Atcher was on Dave Nemo's, Mark Willis' show yesterday talking about nuclear verdict. I just wanted to ask you, tell me what else you think affected this start in 2010, Dave. You ever think about that?
The effect of this starting
that led to this, two things. This is when CSA came out. Yeah. And so now the lawyers have plans to put out and look at their past history. And also a lawyer and a psychologist wrote a book and published in 2009 called The Reptilian Theory of Suing a Trucking Company.
Yep.
And those two things factor. And ever since, there's many others from more economy and all that. But those two things I point at, that 2010 to me has some significance, because that's when it started getting bad.
And it does. With those CSA scores and CSA coming online, certainly played a big role. The reptilian theory and the fact that blueprints have been publicly shared by plaintiffs' attorneys on how to beat some of these cases. Again, these are instances where this becomes, I don't want to say easy money, but it becomes one of these things. If you have a good case that falls into some of these parameters, it makes it easy to have precedent-setting cases before then to refer to, so that they can follow that timeline or that playbook, if you will. And that's basically what has certainly happened.
Agent, if you get nothing outside about this, you want to underline slide 13 and share this with your insured, because this came out of the actual study that I found the most significant. There will be more selectivity, meaning if your insured don't have good CSA scores, it's going to be worse, as well as the cost increase. And you've got to get that message to your insureds now to prepare them, so when they negotiate with contracts, they understand this stuff, they can use that data to maybe help get additional revenue. And I know that's a bad word too, Dave, but that's what we got, the message. That's the only choice here is if they don't keep their history clean, and they're going to have just horrendous rate increases. They're going to get some anyway, but it's going to be a factor of their on the road history as reflected, unfortunately, with CSA. And when I say unfortunately, we could do 2 more hours talking about how inaccurate that stuff is. But still, that's what goes in court, and that's, you might not like it, but that's what it is. That's what we're dealing with.
We can go for days on all sorts of different. I mean, this webinar alone has so many branches and stems leading off of it that you and I could probably go for days on some of these issues without a doubt. And you hit the nail on the head, is what can these insureds do? And that's what we call a great segue, Tommy. So I appreciate you laying that down. Is obviously event recorders, ELDs, technology incorporated into the trucks. These are all great things, and safety culture improvement. And that's one of those things is insurance companies are going to be looking at these carriers without a doubt, and there's going to be some selective choosing going on, if you will. And when you talk to your insureds, this is primarily one of the things they'll be needing to start to do, specifically as it comes to technology. I heard on FMCSA's Safety Summit just earlier this week when they talked about emergency automatic braking and what was the market penetration on that for new trucks coming off the line, and it was at 50% right now. 50%, 50% of trucks coming off the line had AEB, and quite frankly, that number is going to continue to creep up because it's one of those necessary things right now, and it's viewed as accident prevention technology, not accident justification technology. And that's one of those things that will continue to go down that road. And technology, or what they're calling ADAS systems now, automated driver assistance systems, are certainly going down that road and becoming more prevalent for this. And safety culture, there's never going to be a replacement for safety culture. If you don't have a good safety culture within the carrier, that will probably be one of the harshest things you can do, is have a poison climate, if you will, when it comes to safety. So certainly some of these things are all being judged at the carrier level.
And just a note here as we finish the limits, and we're going to shift to a different subject here in a minute. The event recorders are the cameras, guys. And Dave, I think you agree with me. To me, it's crazy for a trucker not at least have the forward-looking one. I know it's debate for privacy and all the rear one. But if I'm a fleet, I want a rear one also. It's just, and you need something that's value. You don't need a GoPro. And
yeah.
EDLs are going to tell us a lot of information. In fact, it's going to affect underwrite. Tom Bray, do you not, with J.J. Keller?
Yep.
He's going to do a webinar. The next one we're going to do, we got him lined up to talk about what the EDLs can show this, and then this technology, this whole safety culture is something we got to sell and focus on.
And it's amazing the stories they can tell. And I remember the days, and this was not too long ago, by the way, when you talked about cameras and forward-facing cameras, as they were kind of the third rail. You didn't really want to get into that conversation because you weren't necessarily sure where it was going to go down, because a lot of people were opposed to them. And nowadays, even truck stops for independent contractors can't keep cameras on the shelves, specifically forward-looking ones, because the benefits of those cameras far outweigh the penalties of not having them. I mean, if you don't have a camera on your truck, because it helps absolve you or helps justify the driver's actions in many cases.
Dave, if you ever get this, it does one other thing. Actually, the more beneficial from an insurance standpoint, from economic, that we can point to, is when it shows our driver did something wrong.
Yep.
Because now we settle, we don't fight it. We go ahead and try to put dollars because we don't want to go to court. And that's that you can put $1, because even if you did nothing wrong, you might end up with that Warner case still in court and have to pay money. But that's event here. I have one of the people who talk at our advanced underwriting is a underwriter up by the middle part of the country, and he's talking about his brother's a truck driver, and he said at Thanksgiving a couple of years ago, his brother was cussing event recorders and all that. At Christmas, he was praising them because he had an accident between, and it saved his job. So that was kind of a full cycle where his brother just couldn't, he was touting it. His brother couldn't stand it at Thanksgiving, but at Christmas, it was the best thing since ice cream. So. And
that goes over the entire industry. I mean, at first there's opposition, and then there's adoption. And you can say the same for ELDs. Remember when many people were like, well, I don't want them in their trucks. And now if you gave a driver an ELD, they didn't want them taken out until they were mandated. So it certainly created a more ease of use, more easy truck driving profession, if you will, with some of these things. And just like you said, sometimes these event recorders will get people out of things. These cameras out there certainly justify themselves in that very regard.
The next subject I asked Dave to talk about, and also Joe Holdermeyer wanted this. We hear a lot about marijuana and hemp and all this kind of stuff. It's a lot of discussion in that area, and Dave, I also appreciate spending a few minutes in this area too, besides those limits. I guess what we can finish though, this limit discussion will come up again and again and again. And sooner or later, it's going to happen when things start out, I believe, at some level. Maybe not. In fact, if everything else wasn't going on, the $2 million level would be something that, because most of our insurers have $1 million anyway in the big fleets, but it's just a matter now. This isn't the right time for that.
Yeah, and timing is everything when it comes to some of the stuff. And right now, just with everything the nation's going through with the coronavirus and what have you, and the economy, time certainly is not right for doing one of these increases. But again, I can't emphasize this enough. The victory was getting the language in, so it stays at the front of the conversation.
Yeah, he means the venture, the fortunate part is for the people who want it, getting it in. That's what we're talking about. Not for us who don't want it.
Not for us, yeah. Not for us, but the victory for those that got it in was that it got in the first place, and that's basically what it boils down to. So it's conversations that we'll be continuing to have until the time is right, and then being able to justify, if there is an increase, what that increase would be. And I'm not saying it'll be 2 million. I'm not saying it'll be 4.9 million or stay the same. I'm just saying it will lead to a lot more conversation.
More discussion. Let's talk a bit about this whole subject you got between hemp, and then we can move over a few minutes. I think we got in the end about what marijuana is doing with drug testing and drivers and all that kind of stuff. But the hemp is a real question, hauling, because we got somebody insured in the agriculture area who who are hauling this, and I understand that the states, in a couple cases, that one in the Midwest where they held them hostage because they didn't know the difference between that and marijuana and things like that. So give us a short overview of that, Dave, if you would, please.
Oh, sure, without a doubt. And this is the Cheech and Chong portion of our conversation here. And this is,
my hair's growing long, so I can relate to that now. But go ahead.
So this is where I always like to put this screen in front of people. And if we were talking in front of each other, my first question to the audience would be, which is the difference? Which one of these pictures in front of you is hemp, and which one of these pictures is marijuana? And I would certainly congratulate the person that didn't guess and actually knew.
Or wondered.
Yeah,
what else they did in their life.
So the point we're trying to make with these two photos is they are so dramatically the same and virtually almost identical when it comes to hemp versus marijuana, that this picture highlights that. It's very hard to tell the difference. And for those that are looking at the screen, the picture on the left is hemp, the picture on the right is marijuana. And at the same
it's scary. I knew that.
I mean, I did not know that, and I was just like, wow. In fact, I still kind of have to remind myself when I laid out the slide, the one on the left is the hemp one. But it certainly highlights the problem that's going on in this world today. And is this an issue that's going to stay around? I do see this issue waning because marijuana is becoming more and more mainstream. Uses for recreational purposes, and off the top of my head, I can't remember how many states have actually legalized it for recreational purposes, and that seems to be growing by leaps and bounds. Or every year it goes on a election ballot, if you will, and certainly gets legalized at that point. And you can expect the same to go even further as it creeps in. So as it becomes more mainstream, as legalization of marijuana becomes more mainstream, I think this will be less and less of an issue. But since the Farm Bill passed in 2018, which removed hemp from DEA's list of banned substances, the hemp freight has actually increased, if you will. And because there's so many industrial uses for hemp, you can actually use it to make paper, textiles, biodegradable plastics, even in construction and health food. So these are all real benefits to that hemp plant that doesn't have the THC levels that marijuana has. So when you're looking at some of these things like that, it just kind of rolls into that particular type of environment. So there are uses for hemp out there, and that's what has made it grow in terms of the trucking industry and reasons for that. Now, again,
isn't hemp the base of this? What DVDs? What's that new ornament and that kind of stuff? Isn't hemp?
When you're talking CBD oil?
Yeah, CDB, right.
Well, and that's where you get that interesting part, and that's another problem that goes on.
But isn't that made from hemp too?
It's also it's made from marijuana, but there are some CBD oils that have the active ingredient, which is THC, and hemp has
right. Okay,
it has such a small amount of THC in it, whereas marijuana has a large amount of THC. And the CBD oil, generally, when you look at a shelf of CBD oil, you'll see some that say THC free, where they remove the THC from the oil, and then there's obviously marijuana oils that include the THC. So the question is what's the right one, what's the wrong one? And unfortunately nowadays there's really no true telling, because it's not regulated by the FDA. So even if you're looking at a rack of CBD oil and it says THC free, doesn't necessarily mean it's THC free, which, a lot of drivers are misconstruing that. And again, this is an entirely different subject, because if you use enough of that CBD oil and it's not THC free, you can pop a positive on a drug test. So there's all sorts of ramifications that go into using even CBD oil for drivers who have aches, pains, or just want to use it to rub it into your skin. So the problem is starting to proliferate in that, and it's starting to appear on driver long forms too, in terms of using CBD oil or THC. But the one thing they are saying is make sure you find it from a single source, because if you get it from different sources, there's no guarantee that it's going to be THC free. So, and that's the interesting part about it. And then switching gears back, when you're looking at marijuana, and while it is legalized in over 25 states at this point in time, we have to take a look at what we would call a truckload of marijuana, which is a rarity nowadays. And quite frankly, if you have a trailer full of marijuana in the truckload segment of the industry, that would be a very, very, very high value, high target load of cargo. Most likely, if that were to happen, it would have an armed security escort, to say the very least, which is why not a lot of trucking companies get into this type of thing. And there's not a lot of inventory levels to justify a truckload, if you will, because retail inventory levels for dispensaries out there are not the truckload variety. They're the variety that get delivered in the trunk of a car, which is very inconspicuous, if you will. So
and even some of the laws come in recreation. Like I was listening to something on 60 Minutes, I think last Sunday or Sunday before last, where in California, you can't export it. It's got to be consumed where it's grown.
Correct.
And it's still in interstate commerce, it's still illegal. So This is what we're dealing here. I heard a lot of the movement, Dave, you might know this better than I do, are being moved in vehicles less than 10,000 GVW, so it's not subject to the FMCSA regulations, things like that, and trying to get around that part of it. But
And which is why it goes in trunks of cars, which is why, there's no Costco of marijuana, if you will. It just doesn't happen that way, and the market hasn't set itself up that way. It set itself up that way to be a dispensary of mom and pop type operations, and that's where it goes from here. So it hasn't, again, marijuana hasn't really dove into the truckload market. Hemp has, obviously, for the industrial uses, but marijuana has not, which goes back to that slide we talked about earlier, where it's very hard to distinguish visually between the two. And that's where it all boils down and gets to that one of that, okay, this is interesting. Obviously, at this point, we talked about the THC in hemp is significantly less than what is contained in marijuana. And basically what it boils down to is mistaking at roadside enforcement. So that truckload of hemp could be confused with truckload of marijuana as a truckload of marijuana, because they're so closely similar in appearance. And as this becomes more mainstream, the thought is that it basically will continue to wane. The one advice I always give to carriers that are hauling hemp, and I say hemp because, like I said, nobody really gets into truckload of marijuana at this point in time, is make sure that their paperwork is fully in order so they can justify and avoid these situations with roadside enforcement. And again, there's going to be people out there, the one-offs, that say, okay, well, it sure looks like marijuana to me, and chances are it could be hemp, but if it is marijuana, then it's a bigger problem. But if you have paperwork trail saying you believe it to be hemp, certainly that would help justify and alleviate some of those situations. It's not to say there aren't truckloads of marijuana out there, but again, those are the one-off situations. You know, you probably start getting into some cartel stuff in Mexico, if you will, but I think they recognize that that's not exactly legal operation to start off with. So if you have a truckload of marijuana, so at that point, it's really the hemp haulers that do have to worry about it to make sure that there is no misconstruing it as marijuana. So anything you can do or will do to justify that it is indeed hemp, not marijuana, would certainly pay off in the long run. One of the things, obviously, is the particular kind of freight in terms of hemp has been growing. That's the pun intended, so to speak. And again, like I said, being able to highlight that at the roadside is one of the things that would help alleviate any misunderstanding for that, because that appears to be the biggest problem, is most people may misconstrue hemp as marijuana. Like I said, the value or the presence of truckloads of marijuana just are rarely seen at this point, only because, quite frankly, the targets or the value of that load would be astronomical, to say the very least.
And it's illegal too, and you might have arrests and all kinds of stuff. Just as a curious question as we move this, have your truckload carriers, I know that a lot of your members are not in agriculture area as much as the regular larger entities. Are you running into them wanting to haul hemp and or ask you questions about should they haul hemp or not? I'm just curious how much that market is.
Yeah, we get into interesting. We don't really dive that much into it. A lot of our members, I don't think, are really getting into that market. I've had some random questions. I'll get one every 6 months saying, "What do you know about hauling hemp?" Questions like that, or do people misconstrue it as marijuana? So we'll get involved in those conversations, and they're fun conversations to have, and ultimately loaded with joke after joke, and at the same point, and certainly you get a lot of jokes and entertainment out of those conversations, but rarely do you get those in there. And I think that hemp hauler right now certainly understands, or should understand, what they're getting into when they're hauling hemp, and probably don't want to be hauling truckloads of marijuana. So at that point, it's just like, okay.
And just what you did there is to talk about that. Be careful if your insurers are using these rubs and these ointments and taking these pills. It's supposed to be the Muir cure. And even now, if they live with anybody, because where marijuana is legal, even for health purposes or not, they're going to end up having a negative test. And now with the drug clearinghouse, and you have 50% people being random tests, you're going to have a number of your drivers are going to fail this, and they don't even consume it themselves because and then I don't want to get in this discussion I've been hearing about hair follicles versus the body fluid test, because it stays longer in your hair than it does everything else. So this is just a tip, Dave. I'll have you come back and we discuss all that other stuff later. But
again, like I said earlier, everything we're going to talk about, you could have branches and arms from these conversations and go into 18,000 other different topics that you'll get into. And this will be a 3-day webinar and people fall asleep on us. But at the same point, without a doubt.
We got a few more minutes here. Just whatever have this current here, just a little bit on the next page about where do you see the COVID-19 effect on the transportation. I know short term, you got some truckers who couldn't haul anything, like auto haulers, and you got some others who were running as fast as they can, and I heard the statistics that the crashes were increased and fatalities were increased, maybe for speed, Dave, but it didn't get as much release as we thought we'd do on this time. Can you just give us where you think this is going to go? And then we hear a lot about the freight rate is down, the spot market's down, and it kind of vacillates because we're worried about our insured making money. And we went through a whole series of some of our insureds had their trucks parked. And just for your information, most of our markets that we hear were very willing to reduce the guarantee minimums on the mileages premium, and also allow vehicles to be parked when there's no business, where in the normal times they would never have allowed that to happen. Because of the fear of the federal requirements if they use it. So the insurance industry reacted favorably, not carte blanche like Allstate, because I got 2 checks kicked back or give me refunds, because some of these truckers are getting more miles than they were before. But that's where we are with this part of it.
Yep, and I would say the effect, COVID-19's effect on transportation, short term is primarily going to be how long COVID sticks around. And look, I think we can even equate that to the MCIEF meeting that goes on at Orlando Airport, right? And that's a short-term effect. And I think that boils down to the very fact that the longer this stays around, the bigger problems there's going to be. You know, you start talking about infection rates and contamination rates, and if you will, and that's going to be that'll be the conversation for a time until we get our arms wrapped around this and what actually it is and how we can eradicate it when there will be a vaccine, if you will. Those are the short-term effects. Is quite frankly dealing with COVID-19. Long-term effects is an entirely different subject. And Tommy, you talked about it just before where, you know, speeding has been up and how does that address and what do the accident rates look like specifically for the insurance providers or insureds out there? Is 2020 going to be an asterisk year, meaning have in some cases mileage have been up and accidents have been down? So has it had effect on that upward slope increase of truck fatalities out there, and has it changed that, or are we looking at this with an asterisk? You have to see that and see how it shakes out, because quite frankly, exposure's down. Nobody's on the roads today. I drove to North Carolina and back, and it was actually a pleasant drive. I didn't encounter a single bit of traffic, to say the very least, and the same thing can be said for truck drivers out there. I mean, you talk about, you know, emergency declarations on hours of service that FMCSA has issued in response to the coronavirus, but many carriers aren't even using it because they just don't need to. You know, I think ATRI did a study that said Spaghetti Junction in Atlanta, a trip that drivers average 15 miles per hour is now averaging 50 plus miles per hour. So nobody's out there on the roads today. So it's giving an entire world of people saying, okay, you know, we're traversing, there's no accidents, nobody's on the road. So that could be the long-term effect, and how does it look like? And then you have to actually look at some of these things that they did issue, okay? When you look at something like how trucks and people are operating on the roads today that are wide open, it certainly justifies a long-term infrastructure bill. We talked about that earlier, and that highway trust fund certainly would benefit if we had the funding to build better roads and bridges or repair the roads and bridges that we had to help alleviate bottlenecks out there. So it's laying the groundwork for some thoughts like that. The CDL in and of itself, you know, COVID-19 has shown that there have been problems with the way we issue CDLs and regulate that problem. And when you have a global pandemic like this and CDL offices shut down, is how do you get renewals? How do you get updates? How do you get anything in that nature? Your drug testing program, same basic thing can be said. And these are the long-term ramifications of it. And how does that fed into this picture? And those are the conversations that are really starting to be had, conversations I myself have been involved in on several occasions. And that's one of the things you really have to look at. Short term is going to be what we're doing and how we deal with COVID-19 while it's still around. Long term is going to be what were the ramifications of what we dealt with and how can we build upon it? What did it show us as an industry, and how can we change what we did to benefit what we do? And I think infrastructure bill would do something like that. Maybe streamlining the CDL process certainly would be that way. You know, while there was an hours of service emergency declaration, I don't think anybody's going to say, oh, we need to operate that way all the time, and we shouldn't. There needs to be hours of service out there. But what it did show that obviously freight moves better when you're on wide open roads. And how do we get wide open roads? We get an infrastructure bill and pay fors that really make sense. And that's the long-term ramifications, to say the very least. So you have to start looking at some of those things. Now, when you look at freight rates and cost of operation, certainly you start talking to these economists, and I am not one by any stretch of the imagination. I can barely balance a checkbook. And at that point, it's like, okay, a lot of predictions or things will start turning around, and in some cases they have. The spot market has started going up, which is great. Cost of operation, if rates are starting to go up, that starts to get alleviated, and you start dealing with capacity questions. How many drivers have left the industry because they didn't want to deal with it, and are they going to come back? And if they're not going to come back, what does that mean? Well, it certainly means rates go up. And I always go back to that one quote. I was with a member one day, and he got a call from a customer, and the customer needed some freight hauled, and that trucking company owner said, well, I can get a driver for you. It just depends how much you want to pay for it. And that's that old supply and demand type of environment that, you know, if you have an oversupply of drivers and the rates are low, if you have a lesser supply of drivers, certainly rates go up. If capacity is tight, rates are going to be up. And I think we're going to be sitting there looking at some capacity issues as things start shaking out. because drivers have certainly left the industry, probably, are home right now and don't want to get into that COVID-19 environment. They want to stay with their families, and you can't blame them for doing that, because I think that's in every industry across the country. So in saying that, and then there's drivers out there, and again, our trucking community, the hashtag Thank a Trucker movement has been fantastic. These truckers, they've represented, and I always say they represent the tip of the spear when it comes to dealing with this stuff. They refilled our stores with toilet paper and paper towels and hand sanitizer, and continue to do so. And in coming months, I think they're going to be just as valuable in delivering some of these products. So they stepped up and continue to be applauded for doing so, and I think that will continue to be the case. But it all comes down to capacity and what the industry looks like long term when it does come out of it, in terms of driver availability, carrier availability, what kind of equipment is out there. I know we support a bill right now that temporarily suspends the FET tax, which is that federal excise tax on new equipment. That's about 12. It's $12,000 or something like that on new vehicles, if you will, or $22,000 on new vehicles, and hopefully that would allow some carriers to save some money to put them into other aspects of their fleet, to adopt things like emergency automatic braking and things of that nature. So there's certainly some thoughts in that FET could be included in a stimulus package. There's thoughts that maybe putting it in the next stimulus package, without a doubt, as that gets being worked out on the Hill right now. So there's a whole lot of things, excuse me, that have come out of COVID that make for an interesting future in trucking and how it rebounds. But as I understand it, and talking with some of the economists, some of which present for you, Tommy, have said things will look good. They will look better. It's just a matter of how long COVID stays around.
Yeah, and also, okay, because the COVID there, and you just mentioned the thing that I was thinking about. The older workforce is the one that's more afraid of it. Well, drivers are our older workforce, and once you sit home for a week or a month or two and get that, you're not going to get back in a truck. And some of them lost their trucks. Dave, let's go to the next slide. I really appreciate your time, this hour you spent with us, and our members do. And we look forward to continue our relationship with the Truckload Carriers Associations, as far as the Motor Carriers Insurance Education Foundation. And audience, if you're not a member of the Truckload Carriers Association and don't attend their events and all, you need to do that. They do a great job, and we have a great relationship with them. And Dave, you mentioned the future. I just hope next year in October we can host you again in Orlando. I'd like to buy you some wine and buy you dinner and have you in front of our 600 people that we had before. So it would be nice to know that part of it. So we try to preach the gospel, but anything we can do for your association, let us know, Dave. We're willing to do anything that will help our insurers that you represent.
Thank you. And it's always great being here. You guys put on a tremendous event down there in Orlando. You really do. And it's truly great to recognize groups that are growing like you guys. You guys might grow out of that facility soon before you know it. So it's nice to get off that plane and walk right into that meeting. But at the same point, you guys do such a great job making me feel welcome. I'm always happy to help you all out. So thanks again for having me. It's been fantastic.
And the word of the day is stay safe, Dave.
Stay safe, stay well.
All right, guys, we'll see you next month.